So, hi guys, welcome back to our session, Tradfi and Bitcoin Club. So, we will continue our discussion around Strike and Strife. So, what strategy is doing and how Strike and Strife is more of a sustainable way as compared to convertible bonds and things like that. So, yeah, I will. I have shared my screen and I will play a clip from the video and then we will discuss about it. So yeah, I'm muting myself. So
fast forward a lot because there's excitement and they just want to get to market on your business because and it can't just be focused all the strategy and making sure you have that laid out so that it's almost automatic. People know how to execute, they know how you're delegating all those risks, you're bringing in the right types of solutions to make sure that behind the scenes everything is secure and safe and auditable for you. I mean, those are very important pieces of the puzzle before you ever get to the market to buy Bitcoin.
Yeah, so turning gears a little bit here, when we reached out to you to get you onto the pod, STRF didn't even exist yet. So we were thinking, okay, we'll have him on to talk about this new product offering STRK. But now we really are going to have to dive into the difference between this preferred stock offering of STRK and the new fixed income offering of STRF, so Strike and Strife. So the way I take as much time as you need because obviously there's a lot to suss out here, but how are these two vehicles different from the investor's perspective? And then how are they different from MSTR's perspective when it comes to their, accretive dilution strategy?
So it's been really interesting watching them build into this market for a while now. And SDRK, I think when that came out, anytime you put the word perpetual on anything, it blows people's mind, right? And we saw that exactly happen with Strike. And really, the main difference between the two is going to be the convertibility feature of STRK. And that brings in a different type of investor than a true fixed income product does. So STRK is going to bring in people that look for total return, right? And total return is yield plus capital appreciation. So that's a different type of buyer than you have for Strife, which we got to acknowledge is a great name for a product. I mean, it's very good. Perpetual Strife, it's great. But that brings in those true yield focused investors that want long term stability. They don't want it to be sensitive to the common stock equity. So the people that are buying Strike really do want that floor protection, right? You're higher in the capital stack. So in the event of a bankruptcy, you're higher up the stack than all the common stockholders. So in that stack, it goes convertible bonds are the first ones in preference. Then it's Strife, STRF is the next layer. STRK is behind that. And then it's the common stock, right? So the risk is in the common stock ultimately. And then these preferreds, they've got some protections there. So these really appeal to institutions. One, if you're on Strike, you want some of the upside potential of Bitcoin through the common stock, but you also want a yield generating asset, right? So they're looking for that blend. You've got downside protection, you've got a return you can count on with that 8% dividend. It's $8 a share because, the yield can float, but it's $8 a share annually. So that gives them some potential for outsized return versus a standard fixed income product that is only offering a yield. There's no convertibility feature on STRF. So that is really what segments those two products. But it goes to a different type of a buyer. Not all buyers are going to buy a fixed income product with a convertibility feature. Some of them can only buy products that just generate a stable yield that they can depend on. And so STRF is going to be very interesting to see what the offering ends up at because I think with STRK, people were a little surprised initially because I think the first messaging was that they were looking at $2 billion worth of that preferred offering and then they downsized it to 250 and ended up at 584. Right, so that caught the market off guard. This one, they're starting at a pretty standard 500 million. And seeing how that is purchased by the customers because they are making it a more institutional type of an offering, although retail can still participate through Fidelity in the IPO. But you have to have certain limitations on your account and certain amount of capital in the accounts to be able to participate. But they're really focusing on those institutional buyers, those pension buyers, whereas the convertible one is going to bring in a lot more of like the hedge fund crowd. So they're targeting different types of buyers and different pools of capital. I think that for people that have been focusing on the massive offerings, they're overlooking these a little bit because they want MicroStrategy. And we've been conditioned to see MicroStrategy come to the market now with billion-dollar plus offerings, right? $3 billion convertible offerings.
And oversubscribed every time.
Oversubscribed, yep, all of that. And so that's what the market became accustomed to seeing. With these, they're kind of setting them up, right? This is just getting them established because these are much more difficult to get to market with because they're not just private offerings. All the convertible bonds are private placements. So they're going out finding buyers, but you don't have to go through the whole listing process like you have to with these. So on these, you're seeing them establish these two products. And then instead of continually having to do new offerings, you get what you saw with STRK, where they open up an ATM that they can actually issue the equity for these new offerings through an ATM vehicle. And so they can do that whenever the market conditions are right for it. But what it does is it shifts all of that inorganic selling pressure off of the common stock and into the preferreds. And it's a unique vehicle because you can essentially think of it as a self-correcting vehicle, right? So if they go and they use the ATM on STRK and it pushes down the price of STRK because you've got more selling pressure in the market, the yield goes up. And as the yield goes up, you attract more buyers, right? And the market's going to always revert that back to fair value. So it's different than using an ATM on a common stock because it has that feature, right? That dividend is really a huge benefit to these preferred offerings for them. So they can alleviate all that pressure on the common stock, and that common stock is what drives that extra return on the STRK offering, right? Because it's got that convertible option, so it has that call option type feature. But then you've got the really stable offering in STRF. And that's one, anytime you can get a 10% fixed dividend, that's a huge return for a lot of people. I mean, I've told people before that when they put out STRK, it essentially became the cash account of my brokerages. If I'm settled out of any type of trade, it's just going to sit in STRK. Maybe it'll sit in STRF. I don't know yet. I've got to think about that now. But it became this new type of offering that I have a way to deploy as a retail investor, right? I'm not going to sit in a 0% cash account in a brokerage anymore if I can sit in something that's quite stable and get 8 or 10%. So it has a unique value proposition out there in the market that's going to keep the demand high for it. Now, the question always becomes, well, now they're building these liabilities that they have to pay, right? And that's a worthwhile conversation because that's real. You know, the business historically, and I take 2024 with a little bit of a grain of salt just because there was a lot of restructuring in the organization. So you had a lot of one-time costs within MicroStrategy as they were right-sizing the workforce, which is a really big effort. They were doing all the rebranding. There was a lot of one-times in 2024. But if you look back to the year before that, they've traditionally had $60 to $70 million of free cash flow. So you're benchmarking that against what they have to pay out on these perpetual preferred offerings. And people are going to initially look at that and think, well, right now they can float what they've got out there, right? STRK doesn't have a huge liability with it at the moment. Now they add STRF, that's going to be 50 million on its own. So now you're probably over your organic cash flow. How do you pay that? And the answer that is inconvenient, but it's the reality is if they need extra, either it's going to come from another capital raise or the ATM through the common stock. But that's much smaller. So right now for scale, for what they owe, including STRF, we'll see what that ultimately ends up being at, but I think 10% is probably a pretty good pricing. When you look at that liability and you think about ATM usage, what we saw from ATM usage in Q4 was massive. With this, we're essentially talking about them turning on the ATM for 5 minutes, maybe, to fund these liabilities right now. This is the most liquid stock that's out there. And so, while it's a good metric to look at, the equity has really become the product for strategy. And that leverage ratio keeps them overly volatile relative to Bitcoin, which makes it a massive trading advantage. It's a super liquid stock because it moves and investors can generate returns. So while we're out digging into all the details right now and looking at every component of the strategy, most investors are not doing that, right? How many stocks do you own where you've gone down to the level that you've probably gone on with strategy, right? What you're looking at is which stock is moving, right? You've got a lot of momentum investors, you've got a lot of volatility investors, and that keeps demand over there. So using the ATM at a much smaller scale is still going to be massively accretive. And when you look at the Bitcoin yield that's generated out of there, the math equation you're really doing is you're looking at that initial yield that they generate, which is far more accretive than even the convertible bonds we've seen, 0%, 55% premium, I think was the highest one that they got. So when you look at the yield from that, and then you realize that the perpetual preferred is significantly higher than that, what you're really doing is you're looking at that balance between what point in time will they have issued more equity through the common stock to fund the dividend payments onto these new offerings versus where that initial yield started, that break even point on what they could have achieved through a convertible bond or any of the other offerings. That's what people are going to start focusing on now. And that's going to be a function of how the common stock performs, obviously, because if the share price is significantly higher, it's going to take far fewer shares for them to fund those liabilities. So that pushes that break even point, 50, 60, 70 years out sometimes, depending on how you're modeling it. And sometimes it's perpetuity, there's never a cross. So it's a very interesting breakdown that they've created because they've created a product for every market condition. If market conditions are terrible for the common stock and Bitcoin's in the tank, you're not going to get the same economics on a convertible bond if the volatility crushes or on using the ATM on the common stock as you're going to get on a 10% fixed income product. You've always got that pool of capital available to you. Same thing with STRK, far less sensitive to the pricing in the markets. And that one's probably actually going to respond a lot more to changes in US interest rates, right? People forget that connection where that yield becomes more valuable depending on what rates are doing in the US. So there's a lot more dynamics to watch now when you look at each of these products. But what they're doing is they're creating an ability to operate no matter what the conditions are. And I think that's an immensely powerful setup that they have now.
So I think you can count on one or maybe two hands the amount of entities, if you will, that own more than 100,000 Bitcoin. MicroStrategy's got 500,000. The United States reportedly has somewhere around 200,000. So a little bit of a topic change, but curious what's
So this was about how strategy is planning to buy Bitcoin in every market condition. Like STRK is completely uh, not completely, but very less correlated with Bitcoin. So strike that will help strategy to even tap in strike ATM in the events where Bitcoin's price is has been crashed or in a bear market. So STRK ATM will be able to I mean STRK ATM will be able to fund BTC holdings in the event of a downward trending market, and MSTR ATM will be able to buy Bitcoin in an upwards trending market. So, like if you see the Sailor chart, let me open the chart wherein Sailor tracker, I think. Taylor. So as you can see, like there is much of Bitcoin buying when the Bitcoin price as well as strategies price is at a higher end. See here, you can see before, this is the before strike era. Like at the bottoms, we are unable to see even a single buy. But what will happen with strike is like, you will be able to buy bitcoins at a near local bottom. So that will help strategy to doing this. So that was basically Ben Workman discussing about that. Like strategy is building a company to buy Bitcoin in any kind of market situations, and even uh, Strike ATM is much more feasible than continuously try and issue a convertible bond. Like you have a time period which requires uh, through go through a process of with the fidelity or fidelity or such investment banks, and ask them that I want to issue a $3 billion or a $2 billion convertible bond, and they will go through a process of listing, and this will take time. But with Strike ATM, it's just a click of a button. So this makes strategies strategies Bitcoin buying process, it smoothens out the process. So it helps strategy to continuously keep doing the ATM. Like currently STRK ATM limit is around 21 billion. So yeah, STRK will continue to raise funds, and as long as the liabilities, the dividends which needs to be given to the STRK or STRF holders, the current current consensus or current opinion of people is that strategy will issue MSTR ATM, like they will sell their shares and cover the cover the dividend liabilities. So yeah, like he Ben Workman talked about a point wherein he said MSTR equity is the product for strategy. So that makes a point, and also the amount of money which strategy is able to raise from MSTR ATM, that's a very huge amount when you compare to what dividend liability they will have. Like if you just calculate around 21 billion, if they just do 21 billion, if they have exhausted a 21 billion Strike ATM and they are paying around 10% to it, so 2.1 billion will be their dividend liability in the whole year. But if you see in November, there was a point in time wherein strategy acquired, I think, two times 50,000 bitcoins. Yeah, here. So he see, this is November 18th, and the strategy has done 51,000 Bitcoin acquisition, 4.6 billion, and I think there's one more of 50,000 announcement. Here I can find it. So yeah, here. So in these two, November 18th and November 25. So here, strategy had bought crazy, like 1 lakh, around more than 1 lakh bitcoins in just a couple of weeks. So 4.6 billion ATM has been hit here, and 5.4 billion ATM has been hit here. So when you compare to how strategy can raise funds, it's a little amount. Like it will be a weak ATM to fund the whole year of dividend liability. So that was the thing which um, Ben Workman was trying to explain. So yeah, this was from my side, and if you guys have any doubt or want to add anything, you are free, and then if you have no doubt, then we will go to our next article which I want to cover. So anybody, I think till now don't have. Yeah, Dhruvel, you have unmuted. Go on.
Yeah, yeah. So just a basic doubt. So what you are saying is, with the use of ATM, they can't, whatever the liability they have, they are going to have for the dividends, they can't match that, right? Or like with the
They
ATM, they
are
are
able to match that. They
okay.
are able to. Like dividend liability will be around 2.1 billion.
Mm.
And like if you can see, November 18th and November 25th, they have done this acquisition, Bitcoin acquisition through their MSTR ATM, and they have raised 4.6 and 5.4 billion in just a couple of weeks. So a whole year dividend liability is 21 billion, 2.1 billion, and you have raised around 10 billion in just a couple of weeks. So I don't think I don't think my strategy will not be able to cover the dividends from their ATM. Like as he has told, like MSTR strategy doesn't have any cash flow to fund dividends. Like they are just making 60 to 70 million of cash flows per year. So that might not be enough to fund those dividends. So currently we are there's only a single way to fund the dividend liabilities is through MSTR ATM, and even they can do STRK ATM in case of bear market. So let's say Bitcoin is in a bear market in 2026, and Bitcoin price is down, and MSTR's NAV multiple came down to 1 or below 1. So at that point in time, if they do MSTR ATM, it will be dilutive to shareholders, as like what the strategy is, it should be accretive, right? But in case of bear market, it will be dilutive. At that point in time, they can just do STRK ATM. So STRK ATM will not be dilutive to common equity guys like MSTR. So yeah, that that's the point. Amol, Bala, like, do you want to add something or
No, I'm done.
yeah?
I don't see the price going up.
It will go up, Bala. So okay, then we will continue to the article which I have posted.
One question: what
Yeah,
is GameStop doing something similar, or what is their
yeah.
approach?
They are also issuing convertibles.
Okay, my question is how, like, when you compare MicroStrategy and GameStop, I read somewhere that they have much more cash balance than MicroStrategy. Like they are bigger. Is it so? I have not seen the numbers.
No, the cash balance is not bigger, but they have a significant amount of cash balance which they can convert into Bitcoin and then start doing. I think they have converted some amount of cash balance into Bitcoin. Uh, as far as I know. And like they have also proposed to start issuing convertible debt to acquire Bitcoin and generate Bitcoin yield. But
Are they
I'm
also
not sure.
planning to do some ATMs?
What are they also going to do?
Some ATMs?
Some ATMs, yeah, they can, because I think their multiple to Bitcoin NAV is around. Let's see. Bitcoin treasuries. It's around 2.7 if I'm not wrong. So they can do.
Okay.
How to search? Whenever the company has NAV multiple more than one, that company can do MSTR ATM in an accretive basis. So that is not a problem where if they do an ATM.
Okay.
Yeah, I think the
And
site has not.
what about that Japanese company? Like,
Metaplanet.
yeah, Metaplan.
Yeah, if you can see Metaplanet currently
Yeah.
has an NAV multiple of 4, so it's highly accretive for them to tap an ATM. And Japan's market conditions are completely different. Like you can't do naked short selling in Japan, so this helps uh, NAV multiple like NAV multiple doesn't go too down as compared to strategy, and even strategy is at much higher level, and they are at a level like 500k BTC is not a joke. So NAV multiple
Yeah.
for a bigger company will tend to go around one until strategy announces some products, some
Okay.
cash flowing business, or become a Bitcoin bank, something like that.
Okay. So, if it becomes a Bitcoin bank, then like, does it mean that the Bitcoin is no more an asset in their balance sheet, but it becomes means they put it to use in some form?
Yeah, yeah,
Okay.
that will happen in the future.
Yeah. Yeah. Yeah.
Sorry. So should we continue with the article?
Yeah.
Yeah. So the article also talks about like how Strike and Strife is changing the strategy around raising capital and converting into Bitcoin, and how risky is it, and how what are the problems and what are the solutions. So it will discuss similar to what we have seen in the video, but yeah, here we can get a much deeper understanding of it. So yeah, so I won't go through the summary, but yeah, strategy, more money, more problems, more upside. So this is the basically what's happening. Like, so time to review developments. Since I wrote about strategy, I am still issuing a strong buy rating because my core thesis, strategy being Bitcoin's only investment bank, is in my view only strengthening. I estimate that such an entity would be worth multiple trillions of dollars in market cap, meaning that today's 80 billion market cap has 20x in store over the next decade. Here are the updates since early January 2025. Strategy has opened 21 billion ATM for STRK, the perpetual preferred stock that is convertible to 1/10 of MSTR common with an 8% dividend on $100 liquidation preference. and STRF is a perpetual preferred stock with no convertibility option, and paying a high dividend percentage of around 10% on $100 liquidation preference. Strategy has also issued a $2 billion zero coupon convertible bond due in 2030, and strategy tapped STRK ATM to acquire 130 BTC between 9 to 15 March. So yeah, STRK ATM is just getting started, what I think, and they will see, like, when the volumes go up on STRK ATM, they will try to acquire more, and STRK ATM will be more accretive to MSTR shareholders because there is no new share issuance. So yeah. Each of these developments strengthen my core thesis that strategy has effectively become Bitcoin's investment bank by channeling Bitcoin through its capital structure to create de facto Bitcoin backed securities, which give investors exposure to BTC in a less volatile and more palatable form. So this says what Workman was saying, like generating a 10% yield on a on a cash. Like, we all have some amount of cash in our portfolio at a point in time. So what we can just do, just put that cash in STRK or STRF. Like, currently, as a retail investor, we can invest in STRK. STRF is not live for retail as far as I know. Currently, it might go live. So yeah, this makes a point for STRK, like why why it's less volatile and more palatable form. Like, whatever cash we have in our portfolio, which we can just park it into STRK and get a 10% return on that. So this is the role of an investment bank, to sit in middle of capital markets, underwriting various securities for its clients. In Strategy's case, the client is Bitcoin Network, since almost every dollar raised by Strategy goes directly into buying more Bitcoin, and the issued securities only have value to the extent that BTC continues to generate excess return and volatility. Many people see this as a very dangerous leveraged bet on Bitcoin, which will end horribly. While this view makes sense, and there is in fact a scenario for this thing to happen, people are often mistaken in thinking that Strategy can somehow get margin called if BTC falls in value. A margin call cannot happen because all of its debt are unsecured, non-callable, and multi-year durations. So the only way Strategy can be liquidated is if BTC goes through an unprecedented multi-year bear market over 3 years or more, which kills all BTC related investment appetite from the capital markets. This could put Strategy in a position where they must sell BTC at bear market prices to pay back the debt and service dividends on liquidation preference on preferred stock. If this ever happens, then MSTR shareholders will be left with close to zero equity value. As long as you remember that this is a possible scenario, you can accurately assess your risk tolerance towards MSTR as an investment. With that out of the way, I will now discuss the impact of the developments listed above. There are two big bullish factors and one emerging risk I see: more capital. So this shows, like, we have covered this thing in our previous session, wherein how STRK will target this 300 trillion bond market. So what's Michael Saylor goal is to have 1% of this 300 trillion bond market and go that into Bitcoin. So this is Saylor's goal. So the preferred stock which they are issuing, this is tapping more into bond market. So yeah, preferred stock is the gateway to a lot more capital. Below is a breakdown of global asset classes by total value. Preferred stock has a bond-like instruments sit in 300 trillion square that says bonds. STRK and STRF serve much larger category of investors and investment capital than MSTR common. Within this 300 trillion square, some want fixed income with possible upside, which is serviced by STRK since this is convertible preferred stock. Others want fixed income without such upside, which can be serviced by STRF, a strict income stream and nothing else. Like this differentiates how STRK has a convertibility option of 1/10 to MSTR common and STRF has do not have any convertible option. So it's pure like bond play and no conversion feature. So these two products, STRK and STRF, will appeal to different kind of investors and help strategy to gain more and more to raise more and more capital uh, to buy more Bitcoin. Other investors in 300 trillion bonds square are interested in volatility arbitrage, which is serviced by convertible bonds. So yeah, convertible bonds, as we have seen in our previous sessions, convertible bonds will continue um, doing the hedge fund managers who buy convertible bonds. They will doing their things and doing their stuffs, which we have discussed about the dynamic delta hedging and how do they can they can generate a return from implied volatility and realized volatility. So yeah, the main point is that strategy unveils more offerings with different covenant structures. It will gradually grow its TAM to the whole 300 trillion bond market. To put this into perspective, a mere 1% of this market is roughly twice the current market capitalization of Bitcoin. So this is huge. Like even if 100 billion of 100 billion of Bitcoin buying is there from strategy, the price of Bitcoin can go crazy because the market capitalization works on a BOFA multiple. Like it's not like if 100 trillion MicroStrategy is buying 100 trillion or 100 billion of Bitcoin, the market cap will just grow by 100 billion. There's a kind of a multiple known as BOFA. So the higher the multiple into whatever the amount the current buying is going on, the more Bitcoin's price rises. Like if you go around in November, Sailor bought $10 billion of Bitcoin, and Bitcoin's price rose from around 70,000 to 100,000. So yeah, the $10 billion also is able to move Bitcoin's price in the current market. And of course, if $3 trillion did enter BTC, it would add a lot more than 3 trillion to the BTC market cap, since price is determined at the margin. More optionality for MSTR implied volatility generation. This next point is very underappreciated even amongst MSTR and BTC bulls. One of the persistent headwinds MSTR valuation is so-called NAV premium. Many people don't understand why MSTR trades at a sizable premium to its BTC holdings. The simple answer is that MSTR has persistently increased its BTC share over time. But it takes a lot of financial background knowledge on derivative markets to understand how this is done and why it is quite sustainable. I have covered this topic in previous articles like MicroStrategy, recent numbers, and basic math show the tremendous value in the company. MicroStrategy could be a multi-trillion-dollar company. The bottom line is that MSTR monetizes the volatility of its own equity and then sweeps its proceeds into BTC. Unlike BTC, which does not benefit from its own volatility. So this is a difference. Like BTC has a volatility, but BTC doesn't does not benefit from its own volatility. Which in case of MSTR, MSTR benefits from BTC volatility and its own volatility, through which it can issue the convertible bonds and STRK and STRF, stuff like that. MSTR also dynamically boosts its own volatility over the BTC's volatility by borrowing money to buy Bitcoin, thereby gaining leverage exposure to Bitcoin. This volatility can be sold in the form of embedded options like STRK and convertible bonds. The proceeds of this volatility sales are then swept into BTC increase BTC per MSTR share. Strategy calls this generating a Bitcoin yield. In short, MSTR is an operation that creates packages and exports BTC volatility to the capital markets and then generates a Bitcoin yield for shareholders. Using the proceeds from the sales, buyers of volatility used it to generate profits via dynamic delta hedging. This is also called gamma scalping or volatility arbitrage. If volatility is the product, MSTR's implied volatility is really an index of its Bitcoin yield potential. What is MSTR's IV? Composed of two things: Bitcoin's volatility and the volatility of NAV premium. So, if the NAV premium multiple is 1 time, like 1x, zero volatility, then MSTR would simply move with Bitcoin. This would cause IV to shrink from the current 100 IV to Bitcoin's current IV around 60. This would be significant decrease to Bitcoin's yield potential. So what he is trying to say, the more volatility, the more the Bitcoin yield which strategy can generate. The problem right now is that MSTR has not fully convinced the market that it should be traded meaningfully higher than 1 times NAV. After the rally in November 2024, the multiple of NAV has collapsed from 3 times to just 1.5 times and currently it's hovering around 2 times, I guess. The introduction of Strike ATM program gives strategy the option to do ad hoc buybacks on MSTR, which will have the effect of defending a floor NAV multiple, effectively injecting volatility into the NAV premium multiple and creating more volatility for the common stock. So, if you guys remember, in our last session we had Fong Lee. We have listened to Fong Lee, the CEO of Strategy. So he said, yeah, we have an option to do MSTR share buybacks. So this is not a thing which is not on the table and which they can't do. So they have an option wherein they can just issue a strike ATM and buy MSTR share, which will push the NAV multiple higher. So yeah. While it's unlikely that strategy will take this course of action in the near term, it is nevertheless in the toolbox as a way to fix future IV lulls. If the market knows that the preferred stock ATM may be used at any time to boost NAV premium, then one times NAV argument significantly weakens. The uncertainty of how and when strategy might do buybacks will also add more neutral volatility to MSTR. Also, if STRK ATM is used to push NAV premium above a floor multiple, MSTR can be used to push the NAV premium below a ceiling multiple. This allows strategy to inject volatility into MSTR common while realizing a guaranteed spread from selling MSTR for a high while buying it for low. Note that high-low prices will technically in terms of BTC, because we are talking about multiples of strategies Bitcoin NAV. I think STRK ATM as a very convenient line of credit which company can tap for its own purposes. So yeah, what in this paragraph what he's trying to tell is like strategies internal team might have a rough multiple which they want to keep it as a floor and multiple ceiling which they want to have. And by doing MSTR common ATM, they can whenever the internal target which they have, for example, if they have an internal target of 4x, then whenever the the NAV, a multiple of NAV goes above 4x, they can just tap NAV like MSTR ATM and draw that NAV premium back to 3 or 2, whatever they have in mind, and vice versa with STRK. Let's suppose NAV premium or multiple of NAV goes to back to 1, and at that point in time, they can just buy back MSTR shares and push the NAV multiple higher. And what this will do, this will increase the volatility much more. Like volatility is just going up and down, up and down. So doing this will increase MSTR volatility and help them to raise more capital. So till now, if anyone has something to add or any doubt, yeah, we can go for doubts till now, and then we'll cover the remaining part. Okay,
You can
then
continue. I'm done. Yeah.
yeah, yeah. The risk that is forming. So, what is the risk that is forming? More money, more problems. The notorious big. More money provides more opportunities, but as Big is Smalls has aptly stated, more money can also mean more problems. As strategy expand to service other corners of the capital markets, the risk is that it gets ahead of itself and obtains too many liabilities to service. The current view of how dividend obligations on strike will be serviced is that the MSTR ATM can be used to raise the funds. The logic also applies to STRF. These are two issues with this. When MSTR ATM is used to pay dividends rather than buying Bitcoin, it will generate a negative Bitcoin yield since share count would have increased but total BTC would not have increased. The cost of capital for dividends at the current STRK price of $84 per share is 9.5%. Dividend is $8 per STRK share since it's 8% on the liquidation preference of $100. This is like borrowing money at 9.5% to buy BTC upfront and then never paying back the loan and keeping the 9.5% interest annual interest for you. So what happens in convertible bonds? You have to pay the principal amount back at some point in the future, but this is not the case in case of STRK. Yeah, convertible bonds also this is not the case if MSTR share price is above the conversion price. So STRK and STRF just streamlines the process more, and yeah, while this is okay, BTC, the thing you spend the money on increases by more than 9.5% each year. It is very problematic in a bear market. Using MSTR ATM in a bear market will mean selling shares at a lower NAV premiums and lower prices to pay a fixed dollar obligation. Strategy would have to sell a lot more shares just to meet obligated dividends. The other possibility is to use STRK ATM would not be as exposed to BTC downturns to pay STRK dividend, but this method will increase the dividend obligation for future years. While this can be used to wait out a bear market, it is only compounding problems as time goes on. So here, one more thing which I would like to add on, like STRK ATM is great to fund dividend obligation in the bear market, and one more thing which they can do is like they have an option to not pay a dividend because it's a dividend and not a coupon. In STRF's filings, there is it's clearly stated that MSTR strategy is not liable to pay dividends till 8 quarters. Dividends just gets keeping accumulated till the point wherein they have to pay dividend. So this is how preferred dividend is flexible more than convertible bond. Like if there's a prolonged bear market, MSTR has an option to not pay dividend until 8 quarters. Just a catch there is there is a 1% compounding, 1% punishment kind of a thing which they will have to pay as an extra till 18%. Like currently, it's around currently the dividend for STRF is 10%. So what will happen? 1% every quarter will just keep getting added if they don't pay dividends on time, and it will go up to 18%. So this is the downside, or this is the feature which they have in their filings. So yeah, a more sustainable option might be to issue convertible bonds with lower conversion premiums so that coupons are negative. This is a great point. Like what they can do is like they can tell the hedge fund managers, we will issue convertible bonds at a lesser premium. For example, last convertible bond was issued at a premium of 35%, and yeah. So what they will tell, what strategy guys will tell, what seller will tell, that I will issue a convertible bond at a premium of 25%, and you pay you pay me a coupon. Like coupons are negative essentially means like the person who is paying, who is holding a bond, that person needs to I mean pay the pay the issuer. So this is completely new. I mean, we will see if this kind of thing happens in the future, but it can happen as far as theoretically is concerned. But let's see what happens. This creates a fixed positive financing cash flows, which can be used to offset the negative financing cash flows from the dividends. The bottom line is that no matter how you look at it, the fact that the company does not have cash flows to survive a bear market without selling a bunch of shares, racking up a lot more debt at bad terms is potentially problematic when the ability to issue $21 billion in preferred stock at 9.5% of cost of capital. This could be very well end up being a case of more money causing more problems, especially if that money is used to buy at the top before a multi-year bear market. So this thing is true. Like if we continue buying at the top and there's a multi-year bear market, things can go bad. So yeah, why I think strategy MSTR is a strong buy. Now the first and main reason I rate, now here he is making his case, like his assumptions. So I don't want to get in his assumptions. He is predicting some Bitcoin's price of 175 and $50,000. So I don't want to predict and do things like that. Here is one more interesting thing wherein he discusses when Sailor uses this impressive brand name to create a crypto and Bitcoin aligned products. I have a little doubt the reception will be quite positive and the returns quite good. Strategy is basically sitting on a gigantic reservoir of intangible assets, reputation, brand, credibility, attention, followership, which it has not yet monetized because it has been so focused on Bitcoin, acquiring Bitcoin and issuing various tranches of securities. So what he is trying to make a case like MSTR can launch some products like ETF with capped BTC upside and downside, something simple like a 50% IEF and 25% TLT and 25% IBIT. So what is this 50% IEF and 25% TLT? 50% IEF is the it's basically an ETF to invest in US treasuries, I think short term treasuries, and 25% TLT is long term treasuries, and 25% IBIT can do the trick. So basically, a mix of this will cap the upside and downside, and this kind of product might have a demand. And what strategy can do, just raise billions and earn like management fees through it. The company already raises billions of dollars at a time, so marketing Bitcoin related ETF done through a turnkey ETF provider will be a lot more straightforward than if someone brand new stepped into this space. Strategy already has all the relationships and credibility. Seller has 4.2 million followers on Twitter, many of whom likely invest in an ETF if he was behind it. Running such an ETF would be a fee business, meaning MSTR shareholders would not be exposed to the price risk of BTC in this specific business unit. Strategy would get cash flows from the AUM, asset under management, and there is a point where the AUM is big enough to pay off dividends. This is just one example. The point is that strategy has yet to monetize its brand or its massive unencumbered BTC holdings. Once it does, the dividends becomes much a smaller problem. Conclusion: I continue to buy more MSTR and Bitcoin. I think the future is bright, even though the risks may be marginally higher than they were before. It all depends on whether BTC will have an unprecedented bear market and on whether strategy can develop cash flows. The execution of capital raising plans has gone extremely well and it is evolving into Bitcoin investment bank, which I predicted months ago. So yeah, that's it. Jatin, you can stop recording and the floor is open for questions.